everybody. My name is Cameron Gordon. I'm one of the founding partners at Insight. Before we start, thank you to Global Victoria, Informa and Cellarplate for pulling today's session together. It's great to work with you guys. So my co-director Nada Young and I set up Insight 15 years ago to support food and beverage brands enter and grow export markets across the Asia Pacific region. We specialise in food and beverage only. We work across 12 markets: Singapore, Malaysia, Thailand, Philippines, Indonesia, Vietnam, Hong Kong, Taiwan, South Korea, Japan, Australia and New Zealand. Our corporate office is based in Singapore, and we've got sales and marketing teams on the ground across the Asia Pacific region. We're proud to be appointed as the in-market expert for the ASEAN region for the UK Food and Drink Exporters Association. And we're also major supporters of the ASEAN Food and Drink Exporters Forum. At Insight, we specialise on 5 core areas when supporting our clients. Firstly, rapid consumer testing, so getting real-time feedback from consumers in target export markets with the goal of supporting strategy development. Helping brands understand the inner workings of their category in target markets is a big piece of work that we do. We're really strong on competitor analysis, pricing analysis, margin value chain analysis, target channels and required investment. Core business for Insight has always been facilitating the appointment of best fit in-market APAC importers and distributors for our clients. And then in our view, there's no real point in doing there's no real point in appointing importers and distributors if you're not going to then go on to collaborate closely with them to grow the business over time. So that's another function that we provide. And finally, in the current environment, which it's becoming increasingly more important, activating in-market localized social media marketing to drive brand awareness and demand. Social media nowadays is not really a nice to have, it's definitely an expectation of the market. Creating pull-through is something that distributors and retail partners really want to see. So today I'm going to share some of the essential decisions brands need to make when entering APAC export markets, and our views on how to appoint the right distributors, implement a local pricing strategy, and how to build marketing programs that actually move the needle in terms of sales. My goal for today is not really to shed light on anything that you perhaps don't already know, but it's more to validate, hopefully, what you're seeing in the market and what you're seeing working for your business as well. So when brands look to the APAC region, they see growth, and they're certainly right too. But here's the key point from our perspective. Opportunity does not equal readiness. You only get one chance to make a good impression. So before you start approaching distributors, there are really 3 key decisions that you need to get right. Firstly, and this is a big one I think, and it's a very honest question, are you truly ready to go to market? Distributors are pitched to daily by brands from the global market. The APAC region is very in demand, one of the last bastions of growth in the current environment, and everybody is looking at this region for growth. If your export strategy is, let's try this market and see what happens, your chances of long-term success are very limited. You really need to be able to communicate, firstly, your success metrics in your home market. Distributors are wanting to see proven brands in the market, and really being able to show your success in the home market helps. One of the huge benefits that Australia and New Zealand brands have is scan data. That data is not available in all markets, so being able to show your position in your home market is really helpful. Your recommended positioning within the category in the market you are wanting to enter is also really helpful. If you can really communicate to distributors and they can communicate to their real retail partners where you should be positioned within the market, it really shortcuts the discussion. Next, how a partnership with a local distributor and relevant retailers will be commercially viable for them. That's all they're really, truly interested in. Finally, how you'll support the growth of your brand from both a sales and brand awareness perspective in the new market, not only at the beginning, but also ongoing. Distributors are not looking for interesting ideas or first-to-market products. They're looking for credible, commercially attractive business opportunities on which they can invest their time and money in. The second question is around market entry model. Many brands assume, why don't we just sell direct to retailers? On paper, it looks like a great idea. Cut out the middle distributor margin and build a direct relationship with the retailer. In reality though, in most APAC markets, with very few exceptions, if you take a long-term perspective on it, it fails. Because obtaining a listing is only the very beginning. The prize is not getting a listing, the prize is not getting a distributor. The prize is not only survival, but success 5, 10, 15 years down the track. After listings come merchandising, marketing, promotion, trade execution, compliance, putting out the ever-present fires, and on-the-ground support. At best, again with very few exceptions, retailers can get your product on shelf, and some struggle to meet that KPI. Retailers expect presence. They expect marketing, promotion and merchandising support. They accept follow-through. One of the things I say far too often, but I think it's relevant, is you wouldn't launch a new brand or a new product in the Australian market, put it on the shelf and see what happens. The export markets are no different. In fact, it's harder because, in the case of your brand here in the domestic market, how long has it taken you to get to where you are today? When you're going into a new export market, you're starting fresh, you're building from the ground up. So that piece is really important. Without boots on the ground, you cannot deliver that consistently. And this is why, in our view, a well-appointed distributor remains critical in the APAC region. Sell-through matters far more than sell-in if you are taking a long-term view. Thirdly, are you committed long-term? APAC is not a quick-win market. The first 12 to 24 months are typically an investment phase with a break-even mindset. You're building awareness, trial, distribution credibility, retail confidence. If your mindset is short-term, the APAC region is going to frustrate the hell out of you. If your mind is long-term, the APAC region can become a powerful growth engine for your business across the region. After being in this business for 15 years, our view is that your distributor is your most important in-market partner. Across the APAC region, your distributor is not just moving boxes. They're your sales team, your compliance support, your trade marketing partner, your marketing intelligence source, your merchandiser, your firefighter. They are selective. They're pitched to by hundreds of brands, with the great ones being pitched to daily. Only a small percentage move forward. What do distributors care about? Distributors focus on commercial fundamentals when assessing new distribution opportunities. Things like product quality and taste, logistics, shelf life, pricing structure, margin opportunity, marketing support, volume potential. Strong commercial foundations always win over what is new and shiny. Presenting a clear business case, Presenting a clear business case to distributors. When approaching APAC distributors, clarity is everything. You should be able to clearly articulate your export price, your expected retail positioning if you're a grocery brand, the margin opportunity for all channel partners, including the distributors and the retailers or wholesale customers, target distribution channels, and marketing support commitments. If you cannot show how the value chain works commercially, the opportunity stalls. Relying on a distributor to undertake the commercial viability study significantly, in our view, decreases your chances of success. They're busy people. It's best to do the work for them, or even to do as much of the work for them as you can. in order to prove concept. Preparation helps cut through and gets the ear of distributors. It shows intent, which is truly valued. When choosing the right fit in terms of distribution, bigger, as I'm sure many of you know, is not always better when it comes to distributors. You need alignment. Some of the core areas that we look closely at: category experience, relevant retail relationships, strong and fast communication is a big one for us. If you're pushing them for communication at the start, imagine how it's going to be when life gets, challenging. Capacity within the team, cultural fit. We look for experience with well-known brands as an indicator of potential. Merchandising and marketing capability, in our view, is one of the most important things to look for. Getting on the shelf again is not the prize. That sell-through and that push-through is. Urgency, in our view, is also important. If you're waiting for communication, if you're waiting for feedback, it's a good sign that it's perhaps going to be a challenging relationship. Across the Asia Pacific, business is built on relationships. Often, and we've seen this a lot recently, one strong account manager within a distribution business can determine your success. Get close to those who do the heavy lifting for you and let them know verbally that you appreciate their effort. Exclusivity is a topic that comes up a lot. Appointing more than one distributor in a market, in our view, typically leads to problems. Because of the way retail listings in particular are generally structured, it makes it very challenging to have more than one distributor in a market. Competition between distributors often leads to a lack of motivation, annoyed trade customers, and mismatched pricing across the market. In our view, a well-appointed sole distributor with a clear and agreed business plan in place is the best way to go. On crafting a competitive and sustainable pricing strategy, pricing, in our view, is where many export strategies collapse. Pricing is not what can we charge. Pricing is this financially viable for everybody in the supply chain? It's really important to understand the full cost stack. So your export price strategy has to be viewed within the overall context of in-market price positioning, taking into consideration freight, duties, clearance, distributor margins, retailer margins, promotions, listing costs, and returns. If your export pricing squeezes margin along the value chain too tightly, your distributor has no incentive to prioritize your business. Across the APAC region, priority drives performance. Salespeople and distributors, if we're being honest, will prioritize selling what is easiest to sell, or what they are financially incentivized to sell by way of margin. Positioning through pricing is very important. Consumers across Southeast Asia in particular are increasingly research-driven. In advance of purchase, or as we move through the purchasing journey, they compare ingredients, sugar levels, protein, production methods, origin, the origin of the product, the origin manufacturer of the product, pricing at origin, and certifications. In premium markets, especially across Southeast Asia, price signals quality and status. In value-driven markets, pricing must feel justified and accessible. You must decide clearly, are you premium? Are you mainstream? Are you niche functional? And your pricing must support that positioning consistently. Price promotions still work. Price promotions drive trial quickly, but they must be structured. A strong price promotional strategy should include introductory offers, retail alignment, digital support, clear timeframes. Discounting without structure only erodes brand equity. Discounting with purpose accelerates penetration. On developing marketing and promotion programs. Marketing is where brands either gain momentum or they disappear in Asia-Pacific export markets. Distributors prioritize brands that actively stimulate demand. Retailers increasingly want to see proof of investment in consumer pull. Consumers are discovering and validating products digitally. Social media is now core infrastructure. Social media now influences the entire purchasing journey, from discovery, comparison, validation, conversion, and advocacy. If your brand has no visible local, and local is the key word here, digital presence in market, it really does signal risk. You can't blast out into the ether from Australia with Australian-centric messaging and be effective with your consumer. A local digital presence builds reassurance for consumers, distributors, and also retailers. In terms of content that performs, across the APAC region, strong performing content when it comes to socials currently includes short-form video, real-life product usage, educational content explaining benefits, authentic, people-led, real storytelling, and influencer collaborations. Consumers want clarity on, why should I buy this? How does it fit my lifestyle? And what makes it different versus the product I'm currently buying? Localization means everything. Local relevance drives local engagement. This means aligning campaigns with local holidays, adapting language appropriately, reflecting local consumption culture, working with local creators, and being sensitive to local cultural norms. At the same time, your global brand identity must remain consistent. Balance is the key, and this is not always easy. Trade marketing converts. Digital marketing creates intent, trade marketing converts it. High impact trade marketing activities in APAC markets include price promotions. They still work. They're still one of the most important tools. Secondary displays, point of sale materials, sampling, and on-premise tastings. The strongest brands, in our view, find the alignment between digital awareness, trade marketing execution, and distributor collaboration. Everything must work together, hand in glove. So in summary, the APAC region is currently one of the most exciting growth regions globally, not only for Australian food and beverage brands, but for food and beverage brands globally. But success, in our view, requires preparation, commercial clarity, the right distributor, sustainable pricing, active marketing support, local relevance, long-term commitment. The brands that win in the APAC market are not always those that you would expect. The winners are the most prepared. They chip away day by day with their in-market distribution partners, and they are the most partnership focused. Thank you for today.